I'm Charles Guinn, and I'm a certified aging in place specialist. Today, let's explore the topic, should I get a reverse mortgage? I'm going to cover 6 situations where financial advisors and estate planners recommend using reverse mortgages, and also some times when you would not use one. First, extra monthly income. The president of Lauber Financial Planning, Amy Jo Lauber, had a client over 62 who owned a home worth close to $800,000. It had no mortgage, and she was having difficulty meeting her living expenses. Her home was one of the only assets that she retained in a divorce from her husband, and she didn't want to move. Ms. Lauber recommended a reverse mortgage. This gave her a monthly income stream for life, and she could keep her home. Often, Social Security alone, or even with a small pension, is not enough. The addition of money every month from a reverse mortgage can help folks have a comfortable, secure life in their own home. Eliminate monthly mortgage payment. Michael Zimtowski, personal financial planner at Financial Planning Advisors, said that he only uses home equity conversion mortgages, commonly called reverse mortgages, in very specific situations, one of which involved a retired client who was still making a mortgage payment at age 70, and that payment was significantly reducing his retirement savings. Mr. Zimtowski's client used a reverse mortgage to wipe out the existing mortgage and eliminate the monthly payment and stay in his house. Then the money that was going to the payment would stay in his client's bank account each month, and he could use it for other expenses. Purchasing a home. Mr. Zimtowski also promotes the use of the reverse mortgage for purchase, which allows folks 62 and over to buy a new principal residence with a down payment depending on their age and fund the rest of the purchase with a reverse mortgage. They may downsize, move closer to the family, get their dream home, or just have a home more suited to their needs. Using the reverse mortgage lets the client use less of their money and keep more in their investments for retirement income. Maximizing retirement income and Social Security benefits. Alicia Monell, director of the Center for Retirement Research at Boston College, explains that people can also use reverse mortgages to generate income instead of taking money out of their 401ks and IRA balances. Also, with this income, they can put off claiming Social Security until age 70. This allows the benefit to build in order to maximize the amount they receive from Social Security. This retirement planning strategy can significantly increase the amount you receive from these sources over your lifetime. Insurance against downturns in the financial markets. James Shambo, president of Lifetime Planning Concepts, said the line of credit option can help affluent investors during down markets. It's like having insurance against market recessions. If there's a market dip more severe than the investor's cash flow can handle, Mr. Shambo has his clients tap into the reverse mortgage line of credit while the portfolio is in decline. This allows investors to remain fully in the market so that when the market recovers, they can realize the full gain. Then Mr. Shambo assesses when, during the recovery, his clients could repay the line of credit. Having a reverse mortgage with a standby line of credit allows borrowers to draw on the credit line at any time in any amount they wish. Interest only accrues on the amount that's taken out while it's taken out. Building cash for later in retirement. We know from studies that 75% of us will need some sort of care as we age. Not having access to the money to meet the expenses for care needs, home adaptability, retrofitting, medical expenses, and unexpected expenses can be devastating. For homeowners, using the standby line of credit feature of a reverse mortgage builds cash for later use in retirement and will provide the security they need. Here's how that works. Let's take, for example, a couple about 62 or 63 years old. And let's say they qualify for $300,000 from a reverse mortgage. They would get the reverse mortgage at this age, but instead of taking the money out, they leave it in the line of credit. That means they have access to the full $300,000 or any part of it anytime they want, but they haven't actually borrowed it. And it's not accruing interest. This is a standby line of credit. It's standing by for use if they need it in the future. As the years pass and they leave the money in the line of credit, the amount available to them actually increases. Here's why. The Department of Housing and Urban Development, HUD, has mandated that lenders must increase the line of credit over time. The increase is equal to the interest rate of the loan plus 1.25%. For example, if your loan interest was 3%, the growth would be 4.25%, and that's compounded monthly. If you do the math, you'll see that this is a significant increase in the amount available to you over time. And neither the growth nor the line of credit is tied to your home's value. So even if there's a downturn in home prices, you still have access to the full $300,000 cash, plus the additional money due to the mandated growth increases. That money is there if you need it. You may never need it, and if so, you will have never borrowed it and never paid interest on it. For complete information using the line of credit, visit my website at charlesguinn.com or see my video on the subject. When a reverse mortgage is not advisable. There are times when a reverse mortgage is not advisable. If you are planning on moving within a year or two, you should explore other ways to solve your financial need. Also, if after getting a reverse mortgage, you would still be unable to pay your insurance, taxes, and home maintenance, other living arrangements should be considered so you have a sustainable home for the rest of your life. And you should always consider alternatives to using a reverse mortgage. You may see my video, Alternatives to a Reverse Mortgage, for more information. So to review, a reverse mortgage allows people 62 and over to tap into their home's equity without having a monthly mortgage payment. Payment of the principal and accrued interest comes due when the homeowner dies or moves. Homeowners are obligated only to pay the taxes, insurance, and keep the home in a livable condition, just as they would have to do with any loan, or even if they didn't have a loan. A reverse mortgage works well in the following uses: extra money income, eliminate monthly mortgage payments, purchasing a home, maximizing retirement and Social Security benefits, insurance against downturns in the financial markets, and to build cash for later in retirement. There's a lot more to know about a reverse mortgage before you would get one. One way to find out more is by visiting my website, charlesguinn.com, and seeing my other videos, like 3 ways you can get hurt, a simple explanation of a reverse mortgage, or you may want to subscribe to my YouTube channel and see them all. The home equity conversion mortgage was designed to help people with certain financial needs and goals. Correctly applied, it can help you have a place to live for the rest of your life. But if used the wrong way, it can be devastating. So I would like to leave you with this one thought. Don't get financial products like investments, insurance, and mortgage loans on the internet or over the phone from an 800 number phone salesman. Make sure you know the qualified professional you're dealing with, where they're located, how to contact them after the loan closes, and know that they are dedicated to doing what's in your best interest. And that should include telling you not to get a reverse mortgage if it's not the right thing for you. I hope this information has been helpful to you. Thanks for watching.